Hello and welcome everyone to the Traders Mindset podcast. And in this podcast, basically we talk about the market psychology, some key traits of successful traders, some psychological trap, basically trying to really bring you at par in terms of what to look at psychologically, because numbers have it that 80% of forex trading or even investing, it's all about psychology. 20% is just based on the strategy alone. So even if you know a particular trading strategy, without the psychological bit of it, you realize that you might not be successful in trading. And with me today is Robert from South Africa. And I will let Robert introduce himself. He's a good friend of mine, an author actually, as well as a trader in the financial market and an investor as well. But he will talk more about himself. Robert, welcome.
Great. Thank you, Timothy. Thank you for the invite. I'm very glad to be on this podcast. I think this one is very close to my heart about trading psychology and trading mindset. So who am I? I wear multiple hats. In the daytime, I look after Scope Market South Africa as CEO. I also sit on the council of the University of Pretoria as a council member, specifically on the investment subcommittee, where we manage the strategic funds of the university. And then thirdly, I write books and I publish ideas on specifically trading, but also more focused on trading psychology. I guess you would probably call it a bit of, yeah, behavioral economics, financial economics. But yeah, that's what I do.
Yeah. I think having interacted you in this industry, having read your book as well, it's quite insightful. I know you have a lot of for us today. So today I want us to look at the mindset of a six-figure trader. And maybe before we begin, maybe you could tell us what do you think or what could you define a six-figure trader means in terms of maybe probably consistency over time, being lucky? Is it about being lucky? Yeah.
Yeah, I think the one thing that we have to acknowledge that most consistent or six-figure traders have been unlucky. And if you look at the research as well, many a very successful trader has actually blown up account. Myself, I've actually blown up 3 accounts, and it seems to be a kind of rite of passage if you want to do trading. Like everything in life, there will be luck involved. You will get those lucky trades. You'll be get that lucky trend, for example. If you've been sitting on, for example, as we're talking, you've been part of the gold trend, or you do a lot of analysis on gold. Silver seems to be picking up. That's a beautiful trend as well. But at the end of the day, trading, like anything else, requires skill. And then the more skillful you become, the luckier you will become in terms of your craft.
Sure, yeah. So I agree with you. So diving into the topic of today, one of the core issue or one of the core traits in terms of six-figure trader, I think it's all about the mindset traits. So that is things to do with the discipline, patience, confidence, maybe probably even resilience. It's very significant when it comes into the financial markets. So, and a lot of traders, having interacted with a lot of traders in my role as an educator and market analyst, I've realized that actually where we have the biggest problem is not even about understanding a particular strategy, the technicals and the fundamentals and the sentimental. It's all about the mindset, because we teach these strategies again and again. I remember there was a time last week I saw you commenting in a post of someone and telling them, saying we end up, this someone had written a post talking about how traders really fail. I think he was doing an analysis of pro farm traders, how they perform poorly, the reasons why they fail. And one of the comment that really caught me is how one of your comment that mentioned about we even give them the strategies how to do it, but they still don't become successful. So maybe you can elaborate this further in terms of these mindset traits.
Yeah, it's absolutely interesting. I do know the LinkedIn post you're talking of. And it's interesting because one of the most famous experiments that trading was known as the turtle experiment about 20, 30 years ago, where they invited a group of people. So actually, just before that, they were there was a bet between two gentlemen to say, can you teach trading or can't you teach trading? And what happened is basically they gave the traders the blueprint in terms of what to do, but they were very clear on what to do and there were no deviations. After that experiment, and a lot of these turtle traders have actually ended up doing exceptionally well trading, large hedge funds in the US, etc. But after the experiment, Dennis Eckhart actually said even if he had to publish his rules in, let's say, back then in a newspaper, let's call it the Wall Street Journal, people will, first of all, not follow them. And then, secondly, they will want to modify them and change them as a result of behavioral changes. So you're 100% right. I mentioned the research in the book as well. There was research done about 20 years ago in terms of how accurate clients predict the markets. So the research actually indicated that most clients get the direction about 60% correctly, but then they fail. And then they end up with the statistics you mentioned about, 80 to even 80% of clients do not make money. And why is that? And it's basically, as you mentioned, it comes down to mindset. You need a very specific mindset. We are not educated in this mindset. We are not taught trading because how we are, how we think about things, how we are educated about things does not work in the world of trading.
Yeah, I agree with you. And maybe probably could you share your insights in terms of this trader that he or she has a very well written a trading plan, but again, following the trading plan is very problematic for them because what a trading plan really does is that it gives you the rules of the game, how you want to approach the market. But I usually see I've come across so many traders with a very well written trading plan, but again, they don't follow it, meaning that they are not disciplined. So, how would you advise this kind of a trader? If you look at it also in terms of resilience, resilience is very important. This is where we talk about handling losses even without letting them affect your next trade. So, how would someone go about it? Someone who is not disciplined, that is someone struggling to be disciplined in the financial markets. Someone also who is very impatient, maybe probably they are struggling from formal, and sometimes confidence or maybe probably overconfidence can also be an issue. Even underconfidence is an issue in the financial market. So how do one balance these things to be able to overcome these kind of psychological traits?
Yeah, such a good question, and you've seen it and I've seen it. So, um, the old saying is plan the trade and trade the plan. And that is good advice. You do need a method. I won't discard, you could be a psychologically wizard, but you need a method that makes money. So let's assume that most methods do make money. They generally do. You've touched on a couple of points why people do not follow their trading plan. And the biggest reason is basically that people do not understand at the best of times you're dealing with probabilities. Anytime you place a trade, there's no guarantee that this would work out. So that's the first mindset shift that you need to change, that you're working with probabilities. And if you are working with probabilities, there will be a series of losses and there will be a series of wins. And that is also a hurdle because people think why they give up on their trading plans is usually because they think in terms of one trade. You need to think about the next 100 trades. And if you think about the next 100 trades, one out of 100, that's 1%. It means absolutely nothing. You need to think 100 trades, not one trade. So, where I see, and I've mentored people and I still see it from clients as well, they get tripped up by focusing on one trade. And then that requires, to your second point, it requires a lot of resilience, specifically if trade one, two, three, and it can go up to about 11. My record is 11 negative trades. You just need to carry on. You don't tweak your trading plan. You just keep on trading your trading plan, and then your risk to return benefits will kick in. Resilience is also quite important because the game of trading is a game of patience. You need to be patient to take the right setups. You need to be patient in terms of the trade working out. And you need to be patient in terms of the number of trades. This is definitely a game of compounding. And I think, Timothy, the problem is with social proofing and what we're seeing on social media, instant gratification, thinking 100 trades is far. And once you hit the little hurdle, you might not keep the end in mind. And one of the things I always advise people when they move into trading is that they have to be very clear in terms of why are they trading? Are they trading for financial freedom? Are they trading for a second income? Are they trading for a living? Because if you understand your why, you would manage it a lot more like a business. But a lot of people come in because of social proof in terms of, I trade and then in a very short while I'll have a nice car. I can go to Paris and, buy at the shops there. So your why is quite important. You have to think probabilistically or probable. And that, as you mentioned, I think her name's Professor Dwight. She did a lot of research on in terms of resilience, and it ended up with fixed mindset and growth mindset. Trading takes a lot of growth mindset, and also understanding that you're at the mercy of the markets and things will happen according to, sometimes according to how you hope, and then other times not. But you need to be resilient and stick to your plan. If you know your why, stick to your plan and understand that outcomes are probabilistic, you should be fine.
Yeah. I agree with you. Especially social media right now. I think it's one of the contributing factors why most of the traders are not even really making it in the financial markets. Because one of the things that I usually advise my mentees or my student is that borrowing it from the Bible, there is a verse from the Bible that says, "Work out your own salvation with fear and trembling." And I usually advise them avoid social media as much as possible because you might not be able to trade like Timothy, you might not be able to trade like Robert. You have to trade your own, right? So that is understanding. First of all, acknowledging yourself. And therefore, now I came up with a quote that work out your own forex trading journey with discipline and consistency. I think if each and every trader is able to be disciplined, that is following the trading plan, and also the consistency, I think that will be the route towards becoming a six-figure trader. So, talking about that also, having you mentioned about having the fixated mindset, and you understand that this fixated mindset it has really caused a lot of traders. Why? Because you find someone has maybe probably analyzed a very nice setup, maybe probably gold. They are targeting maybe 100 pips. So, and they have an stop loss of maybe probably 50 pips. That's a good trade because risk to reward ratio is at least 1:2. But how they manage this kind of how they manage that trade is what really differentiates, because you find most of them have a fixated mindset. My TP is 100 pips, so if it's not hitting my TP, I'm not closing. They're not. You understand that kind of fixated mindset. I think I've seen it really cost a lot of traders. Someone saying that the trade just went one pip to my target, and then it reversed, and they were so much in profit. So I think avoiding the fixated mindset and understanding that the financial market is probabilistic game really is quite a game changer. So let's now dive into the psychological barriers. And here I want us to look at things to do with the fear of losing, aspect to do with the greed, emotional attachment, and some of the common cognitive biases when it comes into trading, the confirmation bias, the recency bias, when you talk about maybe problem their impact in trading decision. So maybe how you began yourself, because the common cycle of someone coming into the financial market that is maybe probably a newbie, currently now they come with a lot of greed because of the social media hype. So you see a lot of social media hype. So you think because someone is making $1 million, you're also going to make $1 million. So there is that aspect of it. But now, when you come with that aspect of greed, what happens is that you end up not exercising proper risk management, and what follows is fear, is loss. So loss now triggers into fear, such that you might be able to see an opportunity in the market and you are not able to tackle it. Maybe you talking from your point of experience, how you began, is that maybe probably the cycle that you began with? Because that is the current cycle. Because I know you began some maybe probably years ago, not yeah, some maybe probably years, maybe like 20 years ago, if I'm not wrong. But you're going to clarify that. So, how was the cycle? Did you maybe probably began with fear, or did you begin with greed? Because again, this is a route that no one can be able to escape when it comes to the financial market.
Yes, it's such an interesting question. So I think when I started, things were slightly different. So I think the biggest starting point for most people initially. So if you, Timothy, you've got a system that is 80% accurate, and I've got one that is 50% accurate, the old me would go to the 80% accuracy system, because we are taught from day one at school and from numbers, 80% is better than 50%. But then we do not look at the risk to return ratio or risk to reward ratio, which could be totally different, because you can get a system that is 99% accurate but trades like once in a blue moon, and you might not actually make a decent return. So but saying that, that's what I started focusing on. I was obsessed when obsessed in terms of reading books. I wasn't obsessed in terms of getting that system of 80, 90%. And any book that came out, I remember there's quite a famous couple of books called The Market Wizards, and I was so disappointed reading The Market Wizards because they didn't give me the techniques. But they did talk about a lot of psychology and trading psychology, and I just glanced over that because I was hunting for that secret sauce, with that win rate. And then eventually, you go through a process, you start learning technicals, and usually what also happens, you, instead of making it simpler for yourself, you make it more complex. You start adding more indicators, and at the end of the day, most of them, apart from patterns, are just derivatives of price. But you start building this and all these complex rules, and then you think you've got a system, but you actually don't have a system. And then it comes to, so you trade, and the worst trade you can do is a lucky trade. So that's when you trade and you make a lot of money on your first trade. You make it on the second and the third, and you think you're an absolute genius. And the absolute genius, you think of, buying this car and that car and this and that, and then it hits you. And that
Sure.
happened to me as well. And that's why I blew up 3 accounts. And in hindsight, the problem, it starts with a problem. And as I mentioned to you, I'm busy writing another book, which will be out next year. The problem, there are three psychological factors that impact most people when they're trading. It's fear, hope, and greed. And they
Yeah, sure.
both link to expectations. This is where we go wrong. When we start trading, we've got certain expectations. And then when these expectations are not met through trading, you've got hope coming in, praying and, wishing, or whatever you want to call it, that the trade will go in your way. If you start losing trades, then the greed kicks in, because the next trade, I'm going to show the market that the market is wrong, and I'm just going to double up on risk. And then also fear comes in, and fear's got basically two formats. The one is, which we know is the fear of missing out, is basically everyone is talking about it as we're speaking at the moment. Bitcoin has had a good run. Maybe I should get in. It's going from 125 to 150. Gold has had a good run. So that's the fear of missing out. And that's not a reason. You always need to have a valid reason to get in. Again, the expectations, because I have set such high expectations, and they're usually with a monetary. For example, I've had people, I need to make 2% a day, or I need to make 20% a day. When you start doing that, you're gonna have an emotional nightmare. And then the other part of fear, so I talked about fear of missing out. The other fear is not doing anything because you are just paralyzed and you're finding reasons why not to follow and not to be consistent. Because again, as I said, every trade is probabilistic. So you don't know if the next one's going to be a winner or not, but now you are fearful, and you don't trade. So in terms of, and there are a lot of biases, the whole thing with behavioral economics with Kahneman, and Kahneman and Tversky actually won the Nobel Prize, and it sums up why trading is so difficult because we put some. Basically, I say that a loss for a person weighs twice as much as a win. So we tend to put when we lose, we put so much pressure on a loss instead of saying, it's one loss, it's within my parameters, and it's one loss of about 100 trades. And I know I've got a system with an edge. I know over time, I will make money.
Yeah, maybe there is also the third form of fear. I just got to learn this some other days. They call it FOGO, fear of getting out. All right, so
Correct.
you're in a trade,
Yeah.
and you fear getting out of that trade because you see like this trade will continue, the trend will continue. Like right now, when you have maybe probably a good position for gold, there is that fear of missing out because I mean, the fear of getting out because right now everyone is think talking about 3,400. So you want to ride all that wave to 3,400. So how do you manage that kind of fear?
You see, this is where the problem comes in with the expectations, because if you've got expectations that the market is going to 3,400 or that Bitcoin is going to $1 million, you've got that expectation. So the fear of getting out is a problem, because what happens as well as we go up, and if we do use, there are various ways of trade. If we pyramid, we pyramid too much. But there is a person that I've been following for many, many years. And he's got a saying. He says, stops are in, emotions are out. And that basically summarizes, if you put in your stops, you put your initial stop in and you put in a trading stop, you should be fine. And then there should be no emotional ride, and every time he's quite a charismatic character, and I don't always agree with his research, but that piece of wisdom, stops are in and emotions are out, because at the end of the day, you need to be able to say, okay, even the fear of getting out, there will be a point where the trend does change. We saw it last 2 weeks with the US indices. It's changed. It seems it's going up again. We saw it with Bitcoin as well, going very low at one stage, 108, now back to 125. Gold as well, there will be. But at the end of the day, I always say you need to measure a trade. Is it a good trade or a bad trade? A good trade is where you followed process, you had your stops in, you did your position sizing, and some good trades don't end up profitable. But then you get a bad trade that can actually end up profitable because you were just lucky.
Sure, I agree with you. So there is this also, I'm just trying to really demystify. I want us to really demystify this. There is this kind of a trader who basically is so much attached to the outcomes. You see, if you get so much attached to wins, it will definitely affect you psychologically, as well as attaching yourself so much into losing trades. So how should maybe probably one balance, or how should one work about maybe probably not attaching themselves to the outcomes, whether maybe probably a winning streak or maybe probably a losing streak?
Yeah, I think one of the trading psychologists who passed away, I think, last year or the previous year, his name is Van Tarp, and he came up with the idea of R multiple. So basically, the R multiple is basically where you measure the return you made on a position relative to the risk you've taken. So if you've risked, let's say, you've risked $1 and you made $2, your R is 2. And he would only look at R's. So basically, the success of a trade is not a function of It's not a function of, how much P and L you made. It's a function of your R. And then the thing is, you also need to limit your losses to try to get it to 1R. So I've risked one and I've lost one. And then measure, instead of measuring the outcome, because again, it's how we are, um, educated. We are educated with numbers, and the higher the number is, the better it is. But in trading, it is basically about longevity. It's about the next 100 trades. It doesn't mean anything if you made big money now and lose a little bit. You need to be consistent. You've used the word consistency a couple of times. You need to be resilient and not measure the outcome in terms of P&L. The P&L will take care of itself if your plan has got a trading edge. You execute consistently with discipline.
Perfect, perfect. So I think that's about it. And let's now shift our focus to the habits of a six-figure trader. And I want us to look at it in terms of maybe probably the daily routine. Maybe you can share with us what do you think is the daily routine of a six-figure trader? I know you are yourself, you are one because I read that from your book, and I have seen your circles, so I know your friends. They're also six-figure traders. So, what is this routine of a six-figure trader? Do I need to wake up at 5 a.m.? Do I need to maybe probably do a certain specific thing so that I can become a six-figure trader? So, what is this? Maybe probably the daily routine. Maybe you can give us your daily routine yourself. How do you begin your day? How do you position yourself? Maybe probably pre-market preparations, journaling, and maybe probably reviewing of trades.
Yeah, so I'll share what type of trader I am. I'm basically an end of day swing trader. So because I do manage a business in the daytime, so there's not a lot of time for me to do day trading. But you are spot on. I think the thing is with any endeavor that you want to succeed in, you need to treat it as a business. So the first thing, in terms of what I would do is, at the end of the day in the evening, I would download the closing prices, and I trade predominantly the US markets, equities, CFDs, and then not a hell of a lot anymore now, and then South African CFDs, but not a hell of a lot. So I would download the closing prices, and then I use a software package that identifies valid breaks for me. And then I go through each chart. I look in terms of where is it a break, and I look in terms of looking at the previous trend. Is it at the top of the trend or is it halfway on the trend? Previous breaks, and then I start breaking it down to my top three or four choices. So I do that. The next thing is if there is a trade that I do believe that I want to trade, the next step is that I would basically have identified it, then I would apply position sizing. So position sizing is basically I take my capital and I take 1%. So I'm willing to risk 1% of capital. And then according to that, so it's quite a simple little formula. I risk 1%, and that gives me an indication in terms of how many lots, how many shares I can purchase the next day. I also, so that's on a daily, and then when the market, let's say American market opens, in the next hour as we're doing this, I would always place my trade an hour after market open just to get the volatility out of the market. And again, sometimes, sometimes I could say, oh, I wish I got in early, or, but also times I can say, thank goodness I got in late. And then I place my trade. Once my trade has been placed, I go on to TradingView, and I put an initial stop loss level, and I immediately put a trading stop. I also put in targets. Targets are an interesting thing because I never used to use targets, but I was introduced to an old Chicago pit trader, and I'll be writing a lot about him in the new book, who introduced me to targets. But he basically, what I learned from him was that you have your initial stop, which is not from him, but have a trading stop and put in your target. So I do that. That's my daily. And then in the evening again, I review my open trades and see if there are opportunities. I also do a thing called portfolio head, where, for example, I just want to make sure, if I've got five positions and all five of them lose 1%, what will the impact be on my capital? So if all five of them go down equally, then, I'm down 5%, and that's quite easy to get back. Because another problem I've picked up with people, as the capital grows, they seem to have the habit of adding more and more positions, more indices, more currencies. Okay, I'm trading gold. Why not add silver? Why not add platinum, palladium, whatever? So I look at my portfolio quite aggressively, because that's worst case scenario. All five positions, let's say they're all long, all five go and lose money. Then over the weekends, I spend quite a lot just to look at general trends, in terms of the trends, in terms of what the market is. I've always got a good idea. I look at monthly charts and weekly charts just to see where the Dow is, and the S&P and the Nasdaq and gold. So I do that usually on a Saturday. And then also on a Saturday, I review all my trades. So I would review my first question is, was it a good trade? Yes or no? If it is a good trade, I followed process. Bad trade, I don't want any of those, because that shows I was not very disciplined. Then I measure basically, what the R multiple was. Did I get a positive R multiple, or did I keep, if I made a loss, to one? And then, I also score myself as well in terms of, my emotional resilience. Where did I get things wrong? Did I spend my mind wondering about things? Did I question the market? Did I question my stop loss? Because it does happen. It does happen. Or, you've picked up something on CNN and you think, gosh, this is going to have an impact on the market. So that is the routine. So, talking with other six-figure traders as well, they've all got different routines. Commonality is
Yeah.
they only take A setups.
All right. All
Secondly,
right.
they would take their A setups. They monitor the trade from a target price perspective, from an initial stop loss, and then a trailing. The third thing is basically, once they've concluded a trade, you can call it journaling, you can call it review. They review the trade. And there was a fascinating piece last week on LinkedIn in terms of a six-figure trader, in terms of how his performance actually improved through journaling, because you start picking up, blind spots, and you also pick up some markets you should not be trading. So, for example, you know, um, I should not be trading the oil market. I've discovered it's too volatile. It doesn't work for my personality and things like that. So there are some markets you just say, that is not me.
Wow, those are great insights. Yeah, yeah. So, looking at it also in terms of, there's something I was trying to maybe get from you, but I've not heard you mention that, but I know you do it. So, in one of the habits of six-figure traders is continuous learning. So maybe you can share with us, how do you approach continuous learning in your trading, and maybe probably any specific resources or routines, maybe.
Yeah, so continuous learning is quite important. So I continuously, every year I keep a little book in terms of things that I've added or removed from my training. And most of the things I learned, for example, is through other traders. My biggest source at the moment is through LinkedIn. There's some really powerful and some good research. And there's a guy I've been following. You also follow him. Who's been unpacking which days you should trade, what times you should trade, and things like that. So there's a lot of good research out there. Books as well. There's always books coming out, and then I listen to podcasts. I listen basically to three podcasts at the moment. I listen to Louise Bedford, The Trading Game. Lovely lady out of Australia, been in the market for about 40 years. Her story is unbelievable how she got into trading. Um, then a new one that I only picked up about 2 or 3 months ago is the words of wisdom. He's just breaking all records in a very short while in terms of podcast. And then Alpha Mindcast out of the UK, Stephen Goldstein. I like listening to him, and just Stephen, the amount of I just can't say, the people he brings onto his show, and just listening to that as well, because a lot of people ask me where do I get my ideas for LinkedIn, and it's just through all just listening to other people. About 2 weeks ago, he had Mark Mervini on. He's got Linda at the moment on, and every time you can listen, and every time there's a bit of commonality in terms of everyone struggled on this journey. Everyone had to go through this. It's like learning to play golf. If you want to be a scratch player, you need to be practice, disciplined, and right mindset. There's nothing. There's not a huge difference between being the 1% of something versus the 1% of trading.
Yeah, sure, sure. And that calls for networking, because I believe if there is one profession that can really be very so much lonely, it's trading or investing, because this is something that can be able to do maybe probably even in your own closet without interaction with anybody at all at all. So, and I have realized out of study, out of research, that one another key habit of six-figure traders is networking. That is learning from mentors, maybe probably trading communities, or maybe probably having some trading peers. I'm not sure, because again, I saw this in LinkedIn. Steve Barnes mentioned it on LinkedIn that one of the mistakes that traders really have, or mentors have, is not having mentors. So, like for instance, yourself, you're a mentor. So, you as a mentor, you should have a mentor. So, maybe you can speak to us about maybe probably how important has networking and mentorship, or maybe probably being in trading communities, how has it been impactful to your trading, and how can it be able to help this trader who is very new into the trading community, thinking that they can be able to do it by themselves and thrive?
Yeah, I always tell someone it's quite interesting. So, if you look at the top tennis players, they've all got coaches. If you look at the top sports people, they've all got coaches. So, why is that? We know why that is, even the top
Yeah,
golfers. But when it comes to trading, people think they can do it alone. It's one of the bizarrest things in the world. They would pay a coach to go to gym. They would pay a coach to learn how to cook or to paint or to draw. But when it comes to it, they think you can just go into YouTube. It's the same thing. Why? Well, you can learn tennis on YouTube as well, theoretically, but it won't get you there. So coaching is very, very important in terms of crafting a skill. You need to do apprenticeship. I was fortunate about a couple of years ago that by pure accident, and that's when my trading changed. I met my mentor. I can't name his real name because we were not allowed to. I can only call him Jack. And I will share, I've got a whole chapter in the new book on Jack. And Jack posted, he was harsh, but he was on Facebook. He had a group of 3 people. I still don't know how I was one of the 3. And he was extremely harsh, but we all learned such a lot from him. Specifically, he added concepts which I don't apply. So, for example, one concept that he was a big proponent of, which I do not apply, is like daily affirmations. So he's got a lot of these daily affirmations that are linked to trading, and I will share those affirmations in the new book as well. But then he also got me thinking about, for example, in my world, I never thought about target prices. I would just carry on happily. So he introduced me to target prices. So I've had one trading mentor and who was online, and it turned my world upside down in terms of what trading involved. It was also good to listen because, as you mentioned, trading is a very lonely endeavor. And if you listen to everyone, and I've said this now a couple of times, most successful traders have blown up 1, 2, 3 accounts, easy. And that's quite comforting to hear in one way and not in the other way. But it seems, we are just human and we make mistakes. So my recommendation for anyone is to try and find a mentor, not for the sake of finding that secret source, because there is no secret source, but to check why are you doing it, to look at your trading plan, to hold you accountable in terms of how many of your trades were good, to hold you accountable in terms of if you're going through an emotional struggle, which can be positive or negative. Positive ones are I've got 3 winning trades, I'm the hero, no one can teach me anything, or I'm going through a slump at the moment, I've got 5 losing trades. So again, if the sports world, music world, every world embraces coaching, trading is also a part of it. If you think if 80% of people lose money in terms of trading, if they just spent, let's say, what, let's call it a number, $500, most of them would still be trading instead of blowing up massive amounts of money and then exiting the markets because the markets are rigged and the small retail player can't play and the institutional people will gobble you up, which is not true.
Yeah, sure, sure. So, this is very important because you see, right now, if you tell someone about mentorship, they usually see like maybe probably you're after their money or such kind of things. But I agree with you that to make your learning journey short in the financial market, definitely you need a mentor. If you decide to go it all alone, it will cost you a lot of time, a lot of resources, blowing accounts, and it will end up you finally looking for a mentor. So a mentor is someone who is very important in the financial markets. Not only in the financial markets, like you mentioned, even those in the sports industry, we usually see the role of coaches. These coaches are
Mhm.
mentors. So as we wind up, let's maybe probably talk a little bit about mindset practices. Some of the mindset practices, actually, you mentioned one of them, affirmations. It really didn't make sense to me that affirmations are actually very, very useful in the financial market until I started using them myself.
Yeah.
Because when you talk about affirmation, this is reinforcing your confidence and discipline. There is also the aspect of visualization, that is seeing yourself as a successful trader, even before you start trading, or maybe looking at a trade and visualizing it being a successful trade, even before you execute it. There is the aspect of meditation and mental research techniques, which is basically very important in terms of trying to manage stress. So, but let's discuss deeply about affirmations. Do you use affirmation by yourself? And maybe probably what are some of your affirmations? And how do you advise this trader who doesn't even understand what affirmation are? Maybe probably how do you think?
Yeah.
Yeah,
Look, I don't use affirmations. I used to use affirmations in my in in my life outside of trading, and I've got declarations which I use every morning, but they are more of a religious nature than of a trading nature. So I think in terms of affirmations, what Jack taught us as well with the affirmations is just to get the mindset into the right space in terms of trading. And he had a whole host of them. He had, like, before the trading day starts, or when you're in a trade, and to remind yourself. So for me, they're more reminders, that, what's that famous saying? What the mind can conceive, the mind can achieve. You know,
sure.
so for me, it's more trying to prep yourself up and get yourself in the right mindset. Look, you've raised an interesting question, and I do in the new book as well. I've got a whole list. I think Jack had about 20 of them. I've got about 10 of them, but I think I'm gonna re-look at them and think about that as well. Given that in my personal life I have used them, but never in my trading. But I don't believe it can cause any harm. I do believe, it is something you do. And again, if you look at the analogy of sport, people beforehand, they come up with sayings and, they prep themselves up. And then visualization is quite important. It's something that I've not applied again in trading because I view trading as such a random outcome. Obviously, I would hope all markets and all trades go in the direction what my mind goes to, but it doesn't happen. But it's something that I do think with mindfulness, and there's a lot of books about mindfulness and trading, and I've read them as well. But it also requires discipline, and unfortunately, and I'll be honest with your listeners as well, I've got very good discipline around trading, but when it comes to like affirmations and visualization, I'm a bit of a knit one, drop one, unfortunately.
Yeah, so and maybe probably what's the difference between affirmation and declaration? Now that you use declaration, because I think it's just but the same thing.
Yeah, I don't know. That's a good question. I haven't thought about it. I think if I have to put it in my personal life, affirmation is, you're reinforcing something. You know, um, um, I think the most famous affirmation out there was, each day and in every way I'm getting better and better. That's the most famous one. So that's an affirmation. And if you read the positive psychology books as well, they recommend that you should tell yourself. I think it's a declaration is basically in terms of how I view a declaration is when in my world, when I declare that I can't do it and it's through the goodness of the God I serve, I declare his goodness and his mercy.
Yeah, yeah. Because let me share one of, I don't know whether it's now an affirmation or maybe probably it's a declaration. For me, I trade gold, and I usually tell myself that is Haggai 2:2 that gold and silver belongs to him. So I usually tell myself I trade what belongs to the kingdom. So maybe probably
Yeah,
it's something to encourage myself. Maybe it's, yeah. So it's basically when you're talking about affirmations, for me. Like you said, is something that will help you in terms of reinforcing your confidence and probably your
yeah.
discipline. Yeah, yeah.
Yeah,
So,
look, it's fascinating. This whole topic is very fascinating, and I've never talked about it very publicly, but yeah, it is absolutely very fascinating. But it also, you know, um, in that chapter that will be dedicated to Jack, I need to maybe just relook at this whole affirmation because I've just like listed them without going into the benefits and of using them.
yeah, sure. Yeah. Maybe probably before we wind up, I know you are an author. You have authored a very nice book in the financial markets, and I am one privileged person to have read your book. But it's actually a mind blowing book because it's really an eye opener. But maybe probably you can tell us more about your book. You can tell us maybe probably how to get the book for those who want to get to read your book.
Yeah, so the book which you're mentioning is called The Badass Trader. That was not initially the title. The initial title was The Unbeatable Trader, but given that it's been published through Penguin, they thought there's a bit more brand appeal. So that wasn't the intention. So I wrote the book basically. It was an extension. I've been producing these weekly principles on LinkedIn for the last 6 years. And I was approached about 2.5 years ago by a publishing house in the UK if I was interested in writing a book. And I said, absolutely. They said, you can use a lot of those principles. I said, that's great. And then they said, short story, just submit an application. I submitted the application, it was about 40 pages, and then it comes back and they reject my application, which they asked for. Anyway, I didn't give up and I submitted immediately to Penguin and they accepted the book and it's been published. So it's available globally, it's available on Amazon. I've also got an audible version of the book that is available on Spotify. That was launched about a year ago. And the purpose of the book is basically everything we've talked about. It's basically, why are you trading? Coming up with a trading plan, looking at risk management. And then I do go into one chapter in terms of like FOMO and all of that. And then, so that's the first part of the book. And then the second part of the book, I present, what I viewed my top principles, which I published. So it's done really well. I think the good thing it's opened up a lot of doors for me in terms of meeting people and on LinkedIn, for example, connecting with yourself. And I've got a lot of people that I connect on LinkedIn, and that do ask me questions, and I'm always willing to help. So that is the book. So yeah, it's done pretty well. And the next step is basically if something does well, which is always a problem, they've asked me to write another one. The tentative title of the book is The Complete Trader. And that is a bit different to this book. It'll focus on the three M's of trading, which would be method, mindset, and basically money management. The three things
Oh,
that
wow.
they need to work together. Um, they
Sure.
need to get work together. So it's pretty much written up. Um, I want to probably submit in the next 2 to 3 weeks to the editors, and then it goes through a whole editorial process. Yeah, so hopefully, I'm not sure about the title. It might change, but it's expected to be next year, July, The Complete Trader. It's written very differently to the Badass Trader. There's no principles. There are no pretty pictures, no graphs, no nothing. It's more written in the style of Mark Douglas's book, The Undisciplined Trader, The Disciplined Trader, which is probably the best trading book on psychology ever written. It's in that style, but it reads a lot better. His book is written quite difficult.
Yeah, yeah, I agree with you. Actually, one of the books that really helped me in terms of trading psychology is The Disciplined Trader by Mark Douglas, as well as even The Trading in the Zone. It's really quite a very insightful book by Mark Douglas when
Yeah.
it comes into trading psychology. So I wish you all the best, Robert, and make sure that I be among the top 10 to read that second book. So
Yeah.
for anyone who might want to get the traders, the Badass Trader, the links you can check on the links on the description to the Amazon and also the Spotify. All I can tell you is it's really an eye opener. If you are this kind of a person struggling psychologically, um, this book will be able to shift your sentiments, how you'll be able, in terms of how to look at the markets differently. So, as a parting shot, what's the first mindset habit you'd recommend every trader to start implementing today?
The mindset and you touched on the word of resilience. This is a game of not one trade but 100 trades, and to do them well. It's basically you need to keep going, and like everything else, we can call it resilience, we can call it compounding. If you are consistent and apply with discipline, even even if you don't trade and you invest 10% and you put it into an index tracker, after every 7 years you double your money, but you have to do it consistently with discipline. And it's the same with trading. It's the same with everything in life. If you apply discipline in trading, success will be yours.
Yeah, sure. Thank you so much, Robert, for your time amidst your busy schedule. I think one of the key things that is standing out is that mindset is actually the differentiator between consistent traders and the inconsistent traders, and that success comes from combining strategy, discipline, and emotional control. So, until next time, ladies and gentlemen, thank you so much for watching. And thank you so much, Robert, again for your time. And I look forward to having you probably in the next one.
Great. Looking forward to that. Let's make it the complete trader next year.
Thank you.
Great. Thank you.